We got a lot of economic data coming out this week, and unfortunately, it started out not great this morning, with February retail sales less than expected at 0.2% increase compared to 0.6% estimated. This combined with Empire State Manufacturing, New York manufacturing activity, declined 26 points for the month of March to negative 20. That shows that manufacturing sentiment is also declining in New York pretty rapidly, and that's for March. And then going back to retail sales, that's actual data on consumer spending. And consumer spending accounts for a lot of GDP in our economy. We also saw consumer sentiment on Friday drop to a 29-month low. And although voters are pretty upbeat on Trump so far, they have a negative sentiment on his handling of the economy due to all the tariff uncertainty negotiations. So there's a lot of negativity in the markets right now. And but however, there are some good news and catalysts ahead. First, we have the Federal Reserve meeting on Wednesday. I think they're going to have they're definitely going to pause interest rates, but I think it's going to be a dovish pause, opening up the door to further rate cuts later in the year, because they're uncertain in terms of the negative growth effects of these policies back and forth. You know, they're not sure if there could be an increase of inflation in the Fed, or if it'll decrease growth and hurt the labor market more due to this uncertainty with the tariffs. They're not sure yet. We need more data. So I think that they'll want to see more data and leave it open, but we will be very humble in doing so, opening up the door to perhaps more rate cuts. Obviously, that's my hope. But the key thing is there are dot plots. How many rate cuts are they going to pencil in this year? So I think the market will be very anxious about that. Will it be one? Will it be two? Will it be three rate cuts? So there's a lot there. And then also NVIDIA is having their GTC, their big conference, starting really today, but Jensen Huang's speech and keynote is tomorrow. Investors will be listening to Jensen's keynote speech closely to see, signs of how far demand will exceed supply for NVIDIA's AI chips. They have Blackwell they're ramping up. Their next model will be Rubin, and we want to see plans. Will there be any plans after even Rubin? How far demand exceeding supply is a big factor in terms of NVIDIA's stock price. We want to see demand exceed supply for multiple quarters to come to show a lot of demand for their chips. And they're the key arms dealer in this AI race. So the pick and shovels play, but their stock has been consolidating for almost 6 months. And their valuation has been getting better as their earnings they've been growing into their valuation. Their earnings have been pretty good. So Jensen Huang's comments will be very compelling to see where the market will go next. So that's another thing to watch. And I also wanted to talk about, there's a lot of pessimism in the markets. And although I'm not sure if the market has more room to go or if the bottom was in last week, there's some optimistic things. First, according to a chart by Ryan Dietrich, we never had 3 bear markets in 5 years. We had a bear market, obviously, during the COVID crash. We had a bear market in 2022 due to rising interest rates to combat inflation. And we need another 10% drawdown. Right now, the S&P 500 is down 10%. We need another 10% drawdown to get to 20% to be counted as a bear market this time around in 2025. So 3 bear markets in 5 years hasn't happened before, at least when this data was started to be collected. The closest we've gotten to that was 1966 to 1973. In the span, we had 3 bear markets then, but that was over the span of 7 years. So, having 3 bear markets in 5 years, I don't really think is in the cards. We're also seeing investors, despite all the volatility and the uncertainty with the Trump tariff policies and uncertainty about his policies in terms of the economy in general, we're seeing Bank of America just posted a note that their global wealth and investment management clients had the 3rd largest weekly inflow of money into the market ever since that data was collected. So their investors are buying the dip in the market. This makes me think that if we didn't already hit bottom already, the end is closer to the beginning of the sell-off. Obviously, we could have a little bit more to go. I'm still expecting another 5% sell-off from here. And the temporary bounce we're seeing, I think, is a, not a bear market rally because we're not in a bear market, but maybe a short-term bounce from oversold levels. I'm still expecting a little bit more to go, but the fact that we're seeing the third largest weekly inflow ever from B of A clients into equities and stocks makes me optimistic because investors are buying this dip. So obviously we have to see. Oh, and there's one biggest thing I learned about the markets, over the last month is that, with the Federal Reserve, saying in late 2022, in Jackson Hole's speech that there'll be pain and the market sold off. And even before that, in late 2021, that Jerome Powell was thinking about raising interest rates to combat the high inflation he was seeing. The fact that the Federal Reserve was saying there will be pain, that's why the market sold off. And more experienced investors knew that, especially the ones that were alive during the late 70s, early 1980s that were investing during the time of Paul Volcker raising rates to combat inflation. So they had muscle memory from that. And now, obviously, I know that, but what, Trump and, Treasury Secretary Bissett saying there'll be transition period and a detox period and some pain from fiscal policy side, I never really thought that stocks would really go down from that. And that really seemed to be the case. They started saying that about 3 weeks ago, and stocks declined because of that. So now I know in the future when your government officials like the president, treasury secretary, and whatnot say there'll be some short-term pain, we got to take them seriously too, just like a Federal Reserve chair saying that there's going to be pain to bring down inflation. So that's something that I'll keep in mind next time that happens. Obviously, I learned, from the Federal Reserve doing that. The market went down a lot in 2022 because of the Fed saying that. But now, if you have government officials saying that, that there could be pain or detox period, believe them at their word. And obviously, we had that 10% sell-off that happened because of that. But luckily, I think that the end is closer to the beginning, and I only expect maybe a few more percentage points from here. But I should have took them at their word when they made those comments 3 weeks ago, maybe took 5% off and sold 5% of my stocks when they made those comments. I didn't. Obviously, I invested a little bit last week when the markets were at lows. But this is something to keep in mind in the future is you have to take, on the fiscal policy side, the president, treasury secretary at their word if they want to inflict some pain to bring down inflation or whatnot, just like the Federal Reserve saying that. So that's something I learned and something to keep in mind.